Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 30th, 2010. Well, folks, the last day of the quarter is a down day so far, although, again, we still have about 1.5 hours until the market closes today. It's just a little bit before 2:30 p.m. Eastern Time here, and again, a wild day on Wall Street. Yesterday in the nightly video, I told my members today was likely going to be a wild day. The charts were setting up based on a triangular pattern that I saw on the 60-minute chart. I can show it to you guys in a little bit, and again, it told me that you would have either a breakout or a breakdown today or some major move in the markets. Sure enough, that's exactly what we got. What we got today was a massive gap up, a surge to the upside, and then a massive reversal to the downside as the market came down and went negative. Now, get this, folks. On the gap up and the push up this morning here, we were up over 100 points on the Dow. At the lows of the day, we were down 50, 75, 85, somewhere in that range. So you're talking about close to a 150 to 200 point reversal off the highs of the day today. And the kicker to this was that the economic news was very, very positive today. But one thing I tell my members, and has to be reiterated, and you guys should all be taking this into heart and taking notes on it, is this. All right, when you have the best positive news possible and the markets are at the highs, look for a possible reversal. That is when it will happen. Why? Because psychologically, the institutions will unload into the amateur buying, and you'll see that as a top. Once the institutions unload, and again, they start to go short, and the average person is really just saying, oh, this is way too good, this must be great, economy must be in full-fledged recovery, they throw their weak-handed money in, that's the top right there, all right? Always look to go the opposite way of the crowd. Now, again, what were the news this morning? What were the tidbits? You had jobless claims better than expected at 453,000. You had GDP third revision slightly better than expected as well at 1.7%. Expectations were at 1.6%, so that was better. And then the real kicker that topped the market out was Chicago PMI coming in much, and I repeat, much better than expected at 60.4. Expectations were around 56, so that's a huge, huge positive for this market overall. But again, I please remind you, you have to remember how the market works. The market doesn't necessarily trade off of pure news. It's not just news. It's psychology and a lot of other effects inside, including the charts. Now, the beauty of the charts today are that they were unbelievably true. If you take a look right here, these are lines that, again, I have for my nightly members on the Research Center nightly videos, which, again, guys, everything listed under Research Center at InTheMoneyStocks.com is included inside of that price of $49.99 a month. But bottom line is this. One line I told them about yesterday, and I had on the charts for literally days since it formed, was the pivot top from 2 days ago. Draw that across. Notice the gap up is right above that level. That's called a probable gap and go scenario in the market. Sure enough, it does go. It surges higher. And again, we talked about it being a possibility of a buy there to the upside. The market surges up. Now, the beauty of this is the reversal that took place. Once you got that Chicago PMI at 9:45 a.m. Eastern Time, the market started to come back in. We started to see some massive selling coming in. Good volume today as well. We are already over 200 million. The average this week has probably been about 145 to 150 million. So we're way above the average full day volume, and it's only 2:30 p.m. Eastern Time at this time. Now, as we reverse to the downside, really what I told the members was you're watching this level. And this I'm talking about the intraday stock chat at this point. Watch this level because now that you gapped above it, these two levels, the blue line and the white line, become major support levels. And if you could take those out, then you're talking about a major reversal day to the downside and you could continue to sell. Well, let's take a look at what ended up happening. I'll zoom in a little bit more. First off, the first hit of the blue line I called out as a long scalp in the intraday stock chat. It worked out for about 10 to 15 cents. Then we talked about the hit of the white line as being another scalp. That worked out for another 15 to 25 cents. After you came down, you hit those lines again, and the market closed below. That was the signal you were most likely going to reverse the massive gains and hold to the downside, or at least hold flat to lower today after the big gap up. Sure enough, just as I called out, and again, you got below these levels, or right here, the white trend lines and the blue, the market did reverse and continue to crash down, coming all the way down here to this low pivot from yesterday. And again, even lower down to this trend line. Now, this trend line, remember, you can always buy trend lines on the charts. The charts levels that I give out are precise. They are used as scalping levels if you know the methodology, which dictates first hits of those, understanding consolidation patterns, and everything like that, which is stuff we teach in the Research Center. All right, again, another reason to join. As you came down here, you can clearly see you pierced the 200. There's your little bit of a bounce. Perfect little scalp there. You come down through that, you go to the blue line. Right here, look at the 2-candle green candle up. Where does it go? Right back to that pink line there. You come down again, you take that out, you go right to the white line. What happens? A bounce right back up. So again, utilizing these, a great trading day on the scalping side intraday. In addition, we've been talking to our members about continuing to hold a couple little short positions here over the last week or so, and that has been paying off today to the downside as the market is coming down. Now again, we can't go to the assumption of a down day yet. We have to see where things close. There are a lot of Federal Reserve intervention stuff going on. Today's the last day of the quarter. There's a lot of rebalancing going on. It's generally going to be a crazy day today all the way around, and we are seeing that today. But just be aware, tomorrow's the first of the new quarter. So quarter coming in to the end today, tomorrow first of the new quarter. We have to be prepared for possible new money to flow in. If the markets can't rally back up tomorrow, let's say we end negatively today, and again we go down again tomorrow, that would be a very, very big signal about weakness in this markets, and you would look for more downside. All right, if the markets are able to go back up tomorrow based on new money flowing in at the beginning of the quarter, then you can obviously look for continued retesting of this upper level here. I'm still holding true that this 115-ish level, you're still looking to see if you can ever close above that. So far, no cigar on this market. Again, from the highs of the day to the lows of the day, you're talking about over a $2 reversal or drop on the markets. We are hovering just off the lows now. You can see you went up. This could be considered an in spirit of bear flag, and I want to just draw this in. A little bit of an in spirit of bear flag. It looks like it's trying to break lower but not having much success. We have to watch it towards the end of the day very, very closely in that respect to see if it does continue to break down. Either way, please understand the rules, the methodology, the swing trading abilities that you can have by learning the methodology here at In the Money Stocks, and that's the key. Now, what are some other drivers in today's market? Number one, you have to look at the dollar. As the market started to collapse down and continued to collapse down, the dollar did get a surge today. That's a rarity. In general, you will see that the Federal Reserve is continuing to try to push down this market. Now, it just so happens, folks, that I put out a long swing trade to the Research Center members near the lows of the day yesterday on the dollar. We are now making good money on that dollar trade to the upside. And again, all about knowing the levels and being a member of the Research Center to get these swing trades, get live alerts, and everything included there under Research Center. Dollar, again, is higher, although a little bit off the highs. Continue to look to see if it can make a move up. That is a nice little move. And again, notice how the dollar's up. What is the market doing today? It is slightly lower. Just to repeat here, the Dow is down about 50 points, NASDAQ down 10, and the S&P 500 down about 4. Basically a third to a 0.5% drop across the board. A GLD today, take a look at the GLD. GLD is losing a little ground, but not down much, down 36 cents. Remember, it's a tough situation with gold because if the Federal Reserve pumps money into the system, which props the markets up, then gold goes up. If people panic and fear rips the markets and the markets drop, gold can also go up. Now, it's way too toppy for me to be looking for a long play, but at this point, I'm looking to buy sharp pullbacks. So we get good pullbacks, I will be looking to buy most likely. And again, I'll reveal those trades as they happen live to the Research Center members. USO is the one shining star in this market, in my opinion, why this market is not down more. Up 94 cents on the USO, tremendous move. And I'm telling you right now, if the USO, if oil was flat to negative today, this market would be down over 100 on the Dow easily. This is the one little factor that's keeping this market higher. And again, the reason for that, take a look at Exxon. If oil's up, what do you think about ExxonMobil, which deals in oil? Chances are that's good for them. It is up on the day, up 26 cents. So you can see there are pockets of strength here that you have to be aware of and that are keeping the market propped up. Weakness today in technology shares. All right, some of the NASDAQ 100 that seem to have been propped up for ages now for the last month, we are seeing them weaker. Apple Computer, Google, Baidu, Amazon all down on the day. Netflix getting a big drop. Netflix had a big surge yesterday on a short squeeze, and that's all it was for, guys. Please understand this, and I'm going to repeat this one time here and one time only for you guys in the free video. This surge late in the day was a pure and simple short squeeze yesterday. They took out the pivot high. This was a key pivot squeeze point, and the people on the shorts had to cover. Once the shorts or the weak money is out of the stock, look at what the stock is doing today. Big drop going even below. So they took out the weak hands. Institutions unloaded up here as they were buying late in the day. They ended up shorting here, and look at the drop today. Institutions back in the money, folks. And again, you have to understand these things. It will work. It does work. And again, it's all based on the methodology that we have created here at inthemoneystocks.com. Again, go to the website, join the Research Center or the Intraday Stock Chat. Let's become enlightened. That's what the goal is here. Don't get caught off guard by the tricks of the institutions. You'll end up losing money. Be on the right side of the trade for once. Take care, folks. I'll talk to you soon.